You don't get more time in Bitcoin. You have to act now. This is the topic of today. I was looking at different charts. I was looking at like what's going on. Why are we breaking actually this 4-year cycle, probably this year even? And what does this actually mean for 2026? And I found some pretty interesting charts, some macro things. And really, I want to make today's episode fully focused on what is going on from global liquidity and what does this actually mean for a perceived risk on asset like Bitcoin. I know it's not risk on, but it's perceived as such. And what does this mean for 2026? And do we see patterns in the past that we can kind of look now at what the future kind of brings? This is what we are gonna do today. It will be really fun and really interesting. And so, yeah, thank you so much for all of you guys to show up. I'm happy to say hi in the chat to Pantel, to Gary, to educate yourself. Very important, educate yourself. And so let's just directly dive into today's topic of global liquidity. I want to show you my personal thesis why I think 2026 will be an extremely bullish year for Bitcoin. And before we look at to what comes in 2026, we have to kind of look what is actually going on in 2025, what has been happening in this year. And to actually show you this, I just like look at the Bitcoin price. And let's see what actually has been happening year to date. Now, this is interesting because we are in this glorious 4-year cycle that apparently is there or apparently is not there. Let's see. And in this glorious 4-year cycle, if we believe this 4-year cycle, this 3rd year that we are in now, so there is this 4-year cycle for people that might not know is there's 1 year up, 1 year, 2nd year up, 3rd year up, and then 4th year down. And this actually correlates with the business cycle. And I'll come back to that later, what the business cycle actually is and what kind of fits into this. And then there is the 3rd year, which we are in right now. So right now is the 3rd year, and this is supposedly the best year. The 3rd year is basically like, hey, this is the year where everything completely goes up in Bitcoin. Let's see. Year to date, we have right now 5.93%. So it's about 6% down, which means this 4-year cycle could be dead in the next 11 days. In the next 11 days, if we do not cross like positive, officially the 4-year cycle is dead, which would be extremely interesting. Then is the question, how are we going to proceed from there? What is actually happening in 2026? What is kind of going on from there? And I found really interesting charts and really interesting analysis from other people today to actually dive into this topic. So bear with me, because when I first started to research that, I wasn't sure if it's interesting. But then I was like, oh, something could actually happen in 2026. Now, we have this 4-year cycle, it could break, and now we see what's actually been happening on like a more long-term space. There is a really interesting total liquidity index from GMI. If you look at this is the GMI total liquidity index. This shows that, so basically, for the people that don't know what this is, I also had to look it up and see what actually is. The total liquidity index from GME is an indicator from global macro investors. This is the company of Raoul Pal. In my opinion, a shitcoiner, but as, for example, like Peter Schiff also is great when it comes to analysis of why fiat is so broken, but he's really bad when it comes to the solution. Raoul Pal is one of them that I also think is a genius, but then he also does this crypto thing, so be aware of that. But this indicator tracks overall global money supply and financial ease. combining various central bank balance sheets, the major ones actually, like the Fed, the ECB, or the BOJ, and the key US accounts. So basically, it tracks if global liquidity is expanding or is contracting. It's called MOA or cowbell. I've never heard about MOA or cowbell. I don't know what this is. This is probably something like something I should know about. But it's like, is it expanding or is it contracting? Now, the interesting question is, how has this actually been growing in the past? We've seen it all. Like, we have seen that global liquidity is just keep on rising because we are just printing money. And this is about 8% annualized since 2008. So in the past, what is it, 14 years? No, like in the past 18 years, we have gone up by 8% annually with the growth rate. And I think even beyond that, we've gone up around 5 to 10% since a long period of time, even before 2008. Money printing is not something very new. At the same time, we have the US real GDP growth and the trend curve. This is something very, 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 very bad, because the actual growth of our production is not really going up. Yes, life gets better. We can now fly. We went in this whole discussion, I think, yesterday or day before yesterday, where we looked at like how life actually slowly gets better. But the real GDP growth is actually negative. Now, really interesting also is how is the total debt looking? And I love to look at the USA. I mean, most viewers here are also from the USA, but I specifically like to look at the USA because it is the primary reserve asset right now. And what's happening with the US dollar is a signal, or is basically directly connected to what's happening all around the world. And so the US total debt as a percentage of GDP has been growing massively. This is the US total debt as percentage of the GDP, and it has been at 150% even in 1950. And then we are now at what, 350%? It's crazy for me that we have been going up so much, and we just like keep on growing the debt. Now it's interesting because it's not growing in the same rate in the public one and in the private one. So we have publicly, the global US total public debt has been just going up and up and up and up and up. So we have here a little bit of contracting between 1960 to 1975, but basically ever since 1985 around-ish, it has been going up in a straight line, obviously with some small contracting ones. Now, how does this actually look in the private sector? Funny enough, the US total private debt as a percentage of GDP has gone down. So we had a high here in 2010 with 140%. We have gone down to almost 120%. We had a huge spike for some reason in 2022, around 140 again, and we are now actually down under 120%. Now, what does this all mean? How does this relate to Bitcoin? I'm coming to that. But before, I want to talk about something that I've talked about on the podcast for a long time, and it's very, very important to know. US total debt, inflation, all those liquidity metrics mean that our monetary system is broken. And this is not just a monetary problem. It actually makes a lot of other things really, really bad. And there is one specifically bad metric that I'm looking at where I'm getting concerned. There have been people that said this is the most concerning metric for humanity ever. And this is, of course, I will show you here, the US birth rate per 1,000 people. And the birth rate in general is down. It's not just US, but US, it's a US-centric presentation today. We had the birth rate per 1,000 people trending down since forever. Why is this a problem? Why is this a problem? Because like we have this false narrative that we're getting more people, but we're actually not getting more. Yes, we're getting more, but only because we are expanding how long we live. And so the actual birth rate is declining. Now, why is this a problem? Because if we're continuing like that and one woman does not make enough kids, at some point we're gonna extinct. And I really, really, really strongly believe that this is all tied at some point back towards the monetary supply, towards how broken the monetary policy is. For example, I have many friends that are now saying like, hey, I really would like to get married, but I don't even have money for a ring, no matter, like, not even talking about the marriage, but then also after the marriage, then I want to have kids. And the kid is so expensive. I don't even want to think about how expensive this is. So why should I have kids now when I'm only like 28? I will wait till 35, 40, so I can actually afford a kid, which is a crazy sentence to even say. And so because of money, all the things and some other factors, of course, also. But for me, the root cause of all of that is the monetary expansion. So we actually expand the monetary supply, and so we make people poorer, and so with that, people are getting later and later kids. It was normal for my mom's generation and for my grandmom and granddad's generation to get very early pregnant, to get very early kids and get married and all of that. Now I'm here with 27. Oh, I wanted to say 26, but I'm actually already 27. 27 years old, and I'm slowly getting closer to getting married and to having kids. And I hope everything, like, I hope I have a kid with like 30 years old. That's like kind of the aim, what I'm aiming right now for. And the interesting question is, this is now a normal thing. It's almost like early. It's almost like, okay, you already have a kid before 30. Like, don't you want to live life, and don't you want to travel the world and all of that? Very, very concerning in my opinion. But that's a little bit drifting off the topic, but it's very related to that. Now, what is actually going on with global liquidity and the US government debt? This is very logical once you actually look into this. If we have more government debt and higher interest rates and all of that, we have to increase the federal net liquidity. So we actually have to somehow pay for the debt. So if we make new debt, we have to print money to service the debt. Super easy. So if we make debt out of nowhere to pay for things, we have to print money out of nowhere to pay for those things that we couldn't have paid otherwise for. Very logical understanding. And that's why the Fed net liquidity is tracking almost completely exactly with the US government debt as a percentage of GDP. Why am I telling you all of that? Because I think, and I actually saw a lot of other opinions on that, and I will show you all of this today. I think we have a major, massive liquidity event somewhere in the next 12 to 24 months. Maybe like later, but it's very hard for me to imagine that we have it later than that. I think 2026 will be massive, especially with Trump, especially with the new Fed chairman, especially with all the news that kind of breaking now. I'm very certain, I could be wrong, but I am very certain that 2026 will be massive for liquidity. Just look at how much the interest payments, just the interest payments are here projected to be costing us. This is massive. Now, I will show you now a guy that I have respect. There are some things that I respect a lot from him, and some things that I absolutely strongly disagree and very much not respect from him. But he's really good in macro explaining and in macro thinking. And then when it comes to Bitcoin, he's also kind of okayish, but then he also shitcoins around. And he's actually a guy that I listened to a lot when I got started with Bitcoin. I just wanted to preface that because I strongly disagree that any crypto outside of Bitcoin has any value whatsoever. But we can search from people outside of the opinions that we disagree with, what are the opinions that we actually agree with. So this is interesting. This is, oh gosh, I don't even want to show this, but it's so interesting that I want to show this to you guys. This is from Solana. It's the first time ever, I think, on my YouTube channel, the Solana icon popped up. Do not buy it. At least I don't do it. And this is where also I had the charts from. This is Raul Pal. He's currently drinking some water, and it's the opening keynote and macro teach-in the Breakpoint 2025 presentation. And this next 2 minutes of the conversation, we don't watch the whole thing. I just collected the most interesting charts from that, and now the next 2 minutes are the most interesting thing. I think he can explain it better than I do, and that's why I wanted to bring it in. So what's actually been happening, and what's going on with the 4-year cycle, and why are we now in a different cycle? He's explaining that now.
We had this perfect 4-year cycle. And this is where everybody's scratching their heads right now, is what the hell's going on? Has the cycle finished? That's the big question everyone debates all day. And for me, you can see what's happened here. There used to be this perfect 4-year cycle, and suddenly it's changed.
So the ISM, just to explain, because he is not explaining what the ISM actually is, and it's a little confusing. It's basically... ISM is basically showing us what is the business cycle that we are in. Are we going in a cycle where it's expanding, or are we contracting? And it's tied to liquidity, it's tied to service, it's tied to many other things. I will leave it at that. And you can perfectly see that this is moving in a perfect 4-year cycle. And now in 2022 and basically 2024, 2025 now, this 4-year cycle has been broken. So all of a sudden, it has been tracking since 2008 in this perfect 4-year cycle, completely coinciding with Bitcoin's 4-year cycle. And all of a sudden, it's breaking. The same thing I showed you right in the beginning. If we see that, we had always the 4-year cycle. This year was supposed to be the massive up year. This was supposed to be 2025. We were supposed to go to 200,000, 250,000, or at least go above the, what was it, the 93,000 that we were at the beginning of the year. But we're not. We could be still 5% is easy. We can easily go up 20% in the next 2 weeks. But it's just not looking like that. And so when we see that, we are now flatlining the whole year. We have gone down, we have gone up, we have gone down, and now we are basically going up a little bit again since yesterday. I think, so yesterday we have gone up 3%. But basically, we are down this year. And even if we're not down this year, we will be almost not up this year. Almost not up this year, in case we are rising a little bit. It would be a massive surprise if we have a huge bull run now in just a little bit of time. So that's why he's telling us here that this 4-year cycle is breaking. And let's see what he's saying about that.
Well, what happened here is we've added an extra year. In 2022, at the beginning of 22, rates were still at 0, and they extended the debt maturity by a year to 5 years. So we've got an extra year in the equation. So all of the debts that need to get rolled in 2026 and not 2025. So that's why.
And this was the huge fight that Fed Chairman Jerome Powell had with US President Donald Trump. If you followed politics at all in the last, let's say, 12 to, 14 months, US President Donald Trump has fought with Jerome Powell, the Fed chair, a lot about like what policy he should actually make. And he had kept the interest rates too high. In Donald Trump's opinion, he wanted to drop them. He dropped them a little bit, but not enough. I think he even had too late. Jerome Powell, too late, kind of nickname, alias name for him. So this is really interesting that it not only shows in the data, but it also shows in politics what's been happening this year. And this is why we have been kind of flatlining this year, because we have so many, we have everything. I got this actually asked yesterday in a live stream I did later after our live stream yesterday. I did another podcast live stream on the Store of Bitcoin podcast. And I got this question asked, okay, you interviewed 700 people in 365 people in 2025. 2025 has been such an amazing year. And only good news, there's been nothing bad. Why is it not going up? Why are we not rising in price? Why are we stagnating? And this is an interesting question because everything has been good. In the past cycles, we had so many negative news and we have still gone up. This cycle, we didn't have an FTX, we didn't have an Celsius, we didn't have China banning mining, we didn't have any environmental FUD really hugely there. All of those things were already like 2021 and previous cycles. So this cycle was supposedly a great cycle. It was the best cycle for news, and it was the worst cycle for the price action. And so why is that? And I think this is one of the amazing explanations for that. I just saw that, too late Powell. that's the name he got him. And so once we look and let's see what he has to say more.
While we've had less liquidity than we've expected at this point, the banana zone point in the cycle has had less liquidity. I only really found this out over the summer when I redid the maths on all of this and realized, okay, wow, they've actually changed the structure of liquidity here. So when we change it to the new 5.4 year where the debt maturity is, this is what we're going to get.
And this is something where I'm slowly disagreeing, because yes, we can look at everything in cycles, and yes, everything always has kind of a cycle, but the cycle also always changes. We now move from a 4-year cycle to a 5.4-year cycle just to make the data fixed nicely. But the reality is just like liquidity hasn't been strong. And so the thing has been delayed, and now we will have a massively supply element, a supply shock coming in, and that's why it is. I don't think all of a sudden we have like a 5.4-year cycle or something like that. But yeah, let's see what he more has to say.
So again, it gives you an idea that we're probably likely to peak out towards the end of 2026 in terms of liquidity, as opposed to this year.
And this is something I mentioned, I think, already once in the podcast, and I don't think I mentioned it in the live stream. I think Bitcoin will be a massive winner of 2026 because it has been underperforming so badly in 2025. And now liquidity hits, and now Bitcoin will rip massively. This is just a thesis. This is a gut feeling, obviously, because nobody knows where the price moves in the short term, and everyone that tells you that knows it has no clue. But when you look at all the breadcrumbs, so there is like a bunch of breadcrumbs around the market, and you can just like see here, and you can just like lay it in front of you, and you're like, okay, all the breadcrumbs kind of tell me 2026 is a bullish year. We can still be wrong, as we have been wrong with Bitcoin in 2025. By the way, one thing that's been happening in Bitcoin in 2025, I think people underestimated that. I underestimated that, is the selling off from OGs that waited for 100K. We had that massive a meme like 100, like Bitcoin to 100K, laser eyes to 100K. We all had the laser eyes in our profile picture. We said like, we have laser eyes till 100K. And everyone that got into at Bitcoin at 1,000, at 7,000, at 3,000, at 23,000, at 31,000, at any price between like 1,000 and like 100,000 had that meme in mind, laser eyes to 100K. What does this to the human mind? If we have a very strong target, think about a place in your life where you had a massive target to hit and you worked very strong towards that. If it might be like a school project where you like worked very hard, learned a lot for like a huge exam, or maybe later in life you had a massive presentation that you had to give in the career, or maybe you had some launch of a product or service that you made in the company, you had something where you really worked towards that. And all of a sudden, on that day that this thing is happening, all the pressure after that is gone. All the workload is gone. You're like, oh. And so this is a cheesy kind of comparison to say the laser eyes till 100K were so strong in our mind that people kind of clicked out of that once it happens. And now they said like, hey, I'm in Bitcoin since $1,000 and I made 100x. I made 100x on my money. I'm a lot more wealthy now. Or someone that was there with $3,000, they made like a 33,000x. Or someone that was at $10,000, they made a 10x of their money. They got substantially richer over the years. And if they DCA'd and they compounded, they got even more substantially rich from that movement. And so then we have the laser eyes and the 100K comes in. What I thought initially was, hey, it will be a massive fear of missing out moment. But what it actually ended up being was a massive selling out moment where OG said, I'm good. I want to fulfill my dream. Whatever the dream is. I want to have the dream vacation with my family. I want to retire my wife and myself. I want to go and see the world. I want to buy that car. I want to maybe even diversify into real estate. Maybe I want to diversify into some stocks. Maybe I want to diversify in gold, whatever I want to do. That's what I'm going to do, because like if you have 100% in Bitcoin, it can be scary. Like I have 100% in Bitcoin and I will not diversify at all. But maybe, like you have 100K and you made a bunch of money. It's fair. It's human nature. And so I think this is also something that was going on and is natural. Now, let's see what we have here now.
So probabilistically speaking, which is how I think about the world, we've got further to go and we've got the big liquidity burst to come. You can see the changes coming. They're changing things like the SLR, the supplementary leverage ratio, that allows them to sell more treasuries to banks. We're seeing the Fed cutting rates. We're seeing changes in the money market. We're seeing the government ramping up fiscal stimulus. All of this is telling you that the big cycle still remains ahead. And I know most of us are impatient in crypto because we want things to go up quickly, but that's not how the world works. It's all based on the macroeconomy. And you just have to have patience, because we've had this very choppy business cycle because there's been no real liquidity yet. Liquidity has been relatively slow.
Yeah, and this is I hate that he says crypto, not Bitcoin. But that besides, Bitcoin is extremely reliant, or not reliant, but correlated to liquidity, obviously. And so 2025 has been multiple reasons why we haven't gone up. As I said, the OG sellings, we had other things. And of course, one of the major things, I think, was liquidity. Now, he now goes into like going into Bitcoin as a macro asset and makes a lot of comparisons. The video is here in case someone wants to look it up and what he actually says. But he goes then ahead and like shills some shit coins and stuff like that. But now I found something else. I found something very interesting. It is a German thing, so you will not hear any other English-speaking guys probably talking about that. But there is a German guy that I also in the beginning respected a lot, and I still respect. I met him also in person already, and he's a gold bug and a Bitcoin guy. Maybe a little bit like Larry Lepar comparison in the German-speaking area, and he's very smart when it comes to the global events. And he gave a really interesting interview that really resonated with me. What's actually going on? And he gave that in the German, in the Austrian paper, actually. And I just translated it to English, so don't worry. It will all be in English and not German. This is what will happen to interest rates, Bitcoin, gold, and other assets in the financial year. Obviously, he wrote a Bitcoin book. Like he even had Saylor on his podcast, but he's also big on gold. And other assets in the financial year 2026. 2026 will be a year in which global financial markets will have to realign themselves. Central banks have reached the limits of their room for maneuver. 2 years of tight monetary policy have left the same consequences. As we said before, we had, as Raul also already said, we had that tightening monetary policy. We didn't have the same liquidity as we had in the previous cycles. That's why we didn't have all the craziness also in Bitcoin. At least I believe so. And this is another indicator of that. Weak growth, exploding financing costs, and private and public budgets drowning under the burden of interest payments. Therefore, in 2026, central banks will have no other choice but to cut interest rates. I think it will happen very, very soon. Not because the economy is booming, but because governments will simply be unable to service their historically high levels of debt otherwise. And this has been happening so many times. Of course, like I think Lynn Olin is amazing in that stuff. Nothing stops this train. If we have low liquidity, if we have a low year in Bitcoin, this is just this 1 year. Look in 5 years, look in 10 years. All of a sudden, there's a different story. All of a sudden, there's a different train drive. There's a different drive in there. So this is what is basically been happening. So the US is hurtling towards a deficit unprecedented in history. Japan is struggling with an overextended bond market that only appears stable thanks to constant emergency measures. Europe is stuck in a state of perpetual stagnation and is losing more competitiveness year after year. And we just had today, or was it yesterday? Today, I think it was today. Today, where the European Parliament granted a 90 billion euro, so I think like 110 billion US dollars, $100 billion in credit for the Ukraine. Crazy. They just like throw money around. Now, no matter like where you stand in this war, but like there's a lot of more money hitting the market. This is just one small example that just happened today. In this situation, it doesn't even take a severe downturn to trigger another monetary policy reversal. A moderate slowdown would be sufficient. Central bank will therefore have to switch to easing mode sooner than they would like, even before the real economy seriously falters. This is precisely the sign of a system that can only be held together by low interest rates. By the way, here is a chart of the interest rates over time. We will 100% come down from those again. Now, these very interest rate cuts will pave the way for the second wave of inflation in 2026. It won't. This is the thing. I hear this all the time now in mainstream media. I hear it all the time. People saying inflation will be better next year. The economy will be booming next year. And all of that. I'm like, where is this coming from? Where are you getting your data from? Like, how do you see that inflation will go down, the economy is all of a sudden booming, and everything will be amazing next year? I don't see it. It's just like the mainstream media is just like saying that. I don't know what actually, like, I don't listen to too much American mainstream media, but I guess they say the same thing. I don't know. So I have no clue where the optimism comes from here. And I think inflation will hit way harder in 2026 than it did this year. It won't arrive as suddenly as the first, but it will be significantly more persistent and I have no clue what that word means. In the US, there are increasing indicators for policymakers will once again resort to direct monetary stimulus, such as the $2,000 checks to households that we've seen, to artificially maintain purchasing power. While this may be politically convenient, economically, it's a catalyst in a system already struggling with high inflation. When monetary easing and fiscal expansion occurs simultaneously, so, okay, now we're coming to the point where basically he just says like stocks benefit from high liquidity. Obviously, every asset in history will go up if there's more liquidity. And it doesn't really go up. It just means the price denominated in the currency that is liquid, gets more liquid or gets like more diluted, will go up. But the real purchasing power does not. If you see the stock market going up 7-8%, and I just showed you, I think in the beginning, here I showed you this, guys. I showed you like it goes up with an 8% annualized growth rate, the total liquidity index. Same thing is happening in the stock market. So if I always find it funny, like friends come to me, hey, I have this low risk play. I don't want to have a bunch of return. I just want to make a little bit more money with my money and keep up with inflation. And then they show me their portfolio and then they're like, hey, we have 3%. I'm like, 3%? Are you sure you're keeping up with inflation? Even the official inflation rates are 3-4%. And the unofficial ones, the actual ones, are a lot higher. And according to the total liquidity, you should make at least 8%. And this is always the tricky thing with the inflation rates. Because like, what are you measuring? If you're measuring all the essential things and all the basic needs, inflation is still a lot higher than I think the official one, but it's not as crazy. If you want to have anything good in life, if you want to go to nice restaurants, drive nice cars, live somewhere nice, like you want to live life not like basic, you want to live life a little bit better, just like a little bit better, every now and then go out to a good restaurant and eat something good. The inflation rate in this world is a lot higher than in the standard basic needs. So it depends on what you want. Like, I mean, if you live in someone else's home, like in your mom's basement, and you don't pay rent, and the only thing that you're paying is your Netflix subscription, inflation is not a problem for you. But if you want something from life, inflation definitely is a problem for you. So 3% is not enough. Now he goes on to say, one, that gold remains an anchor of stability. Yes, I agree. But then he goes on to say, and I very strongly agree with him, Bitcoin is likely to be among the big winners. And now he says among the big winners, because he's in the newspaper, like he has to maybe turn it down a little bit. But I think Bitcoin will be the biggest winner of 2026. Bitcoin as digital gold will also be among the probably even the biggest, yes, he said it, winners. The supply reduction caused by the halving, growing institutional demand through new products, and the global search for store of value that is immune to political interference are creating an environment in which new all-time highs are not only possible, but virtually inevitable. The combination of monetary easing, global uncertainty, and a strictly limited supply has historically always fueled strong upward movements, and 2026 is unlikely to be an exception. So I just think that the thing that we missed in 2025, we will be seeing in 2026. Now, again, short-term speculation, but all the breadcrumbs that I see on the internet flowing around are leading me to this assumption. Now, make with it whatever you want to make with it, but that's my 2 cents. This is my 2 satoshis, my 2 satoshis in that. I found one funny video that is correlating to this topic. I wanna bring this up here because I think we covered that yesterday, and it ties really nicely in to today's topic. And what would be a live stream of mine if there's not at least one Elon Musk video? Let's see.
You're in Palo Alto, and
just as context, the video is a little bit older, so it's not new. Like, it was here posted from Simply Bitcoin at 18th of December, but it has been earlier this year. So not being confused when he talks about just getting out of Washington, D.C.
Not Washington, D.C.
I'm at Tesla Global Engineering Headquarters in Palo Alto.
Yeah. So no more Washington, D.C. You're back at work. You're focused. Yeah?
Yeah, I haven't been to D.C. since May.
Okay.
That was a hell of a side quest.
That was a good side. Any lessons from your time in Washington, D.C.?
The government is basically unfixable.
I love that so much. I saw that randomly today from Simply Bitcoin on my feed, and I don't know how I overlooked that when it came out, but that was really fun. And then he goes on to say, if AI and robots don't solve our national debt, we are toast. And I think AI and robotics actually play a critical role when it comes to fighting inflation. Obviously, like as Jeff Booth says, the real inflation rate is not measured from zero. The real inflation rate is measured from the productiveness that we have. So whatever it is, -2, -5, -10, whatever the actual inflation rate is. So we have to measure it from there and then actually go up over time. And so if we have an inflation rate of 5% and the actual productiveness of the prices that should come down is like 4%, we would actually have an inflation rate of 9 and not of 5%. So taking this into account means just that AI and robotics will have a major deflationary force on our prices. But this major deflationary force is the same as every single technology in history. Yes, it is there, and yes, it will accelerate, and yes, it will be major. But Bitcoin is what's solving it, not AI and robotics. Bitcoin is what's solving, but he has an AI and robotics company, so I will forgive him that. This was really fun, guys. I really loved it. Thank you so much for everyone that is tuning in today. As always, I will be back tomorrow with another episode. It was really fun. Oh, wait. Let's look in the comments today quickly. I haven't looked in the comments. Rajat is here. Thank you so much, Rajat. How are you doing? So before we end, I thought about, like, this whole new live stream is very new to me, and I thought about how to structure it. And the way I will do it now is in the first segment, I will be bringing a topic, I will be bringing something interesting to the table, and I will do it almost uninterrupted, so you can get the value and you can get all the things that you kind of need from it. And then afterwards, I want to do a little bit more relaxed Q&A session, a little bit more like interaction, and see what's going on. Maybe bring up some funny videos, maybe do something more relaxed. So the actual first segment is, this is the content, this is the value, this is what we are going to talk about today, this is what I saw today. And then the second part is, let's see. Let's have a chat and let's see what's going on in the comments. So there's a lot going on today, actually. I don't know if I can see everything right now, but this is really, really cool. And as I said, John is here again today. Really cool. Gary, yes. And this is important. I've actually forgot to say that the whole time. We always talk about the Bitcoin price. And sometimes this very simple rule, one Bitcoin is one Bitcoin, can be forgotten. Something very simple, something very clear can be forgotten, because once we measure every single day, oh yeah, like the Bitcoin price is at 90K, Bitcoin price is at 80K, Bitcoin price is at 120K, we kind of lose sight of Bitcoin is actually the unit of account. Bitcoin is actually what should be the measuring stick. And so if Bitcoin price goes down, this is actually a good thing. It's actually bad news. Like if I tell you that the Bitcoin price will rip next year, it might just be bad news, because maybe you haven't been done stacking. Maybe you're not at 100% allocation. Maybe you want to have more Bitcoin. Maybe your stacking goal is not reached yet. And that's why I also wrote in the thumbnail, like, act now. This isn't the drill. Like we could rip at any point in history, because we have major liquidity coming in, and the market slowly figures out that Bitcoin is the best thing to protect us from that. And so having lower prices just means I get more Satoshis for each dollars, as I always say in the beginning. I hope you don't mean it. I hope that's just a joke. Bitcoin is a scam. Just buy Pokemon cards. I have no clue about Pokemon cards. And just know that they are freakingly a lot worth. Like there are Pokemon cards that are worth a lot of money, but it's not a good store of value for obvious reasons. Merry Christmas. I like the theme. I often feel that because creates a kind of, on one hand, when going through cycles like the present one, it feels like nothing will change. Yes, we have to. This is always, we are so in the moment, and then we forget that there's something bigger going on. And by the way, for Merry Christmas, maybe I can do something fun here. Is it too early for a Christmas theme? We can kind of lose sight that we are actually going in a cycle, that we're actually seeing that there is more going on, and it's a longer term trend, because we are so ingrained in this day-to-day life, in this month-to-month, in this like quarter-to-quarter thinking. We're not looking from 10 years to 10 years to 10 years. We're looking from like 10 minutes to 10 hours to 10 days kind of a thinking. And so we can kind of feel like weird about the cycles, and like really like be in there. Now, it's been crazy. What's going on here? Yes, Robin is back. We need Robin in the USA. I'm doing a lot in the USA. Microseed, my company, is in America. My business partners are almost all of them in America. A lot of my friends are now in America. I will be back in America in April for the conference in Vegas. So a lot of things are going on in America. As always, Queen is here, life-changing, seed planted, orange pilling. Yes, 100%. Oh, bring back the negative news. I saw that. Bring back the negative news is really interesting, because you said, I think you said like there has been the best cycle for positive news and then the worst cycle for price. And this is actually interesting, because now we have such a great cycle for news and such a bad cycle for the price. I don't think if we bring back negative news, all of a sudden this will be happening. The OGs are weak. I prefer Bitcoin in strong hands. This is always what's happening, right? I mean, we don't even have to cheer for that, because the weak hands will sell anyways, and the strong hands will continue to hold. So the strong hands will continue to just be better, and those will be the ones that actually hold Bitcoin. The weak hands will sell. If an OG bought at $3,000, never sold till 115K, and now he sold at 115K. He's now a weak hand. Depends on like how much and all of that. I must end wage slavery. Step 1. Yes, very true. Do this at first. Ukraine is toast. I have to read the comments more. Let's see. Sell your house, sell your kidney, and buy more Bitcoin. Yes, that's where we are. And this is like we would. I think if you already have a house and you already can afford the house and you're financially well off, maybe mortgaging the house is better, depending on like your situation. But there's a lot of different arguments in there. By the way, I saw Roger in here, and I don't know if Roger is prepared to announce it, but I will just do it for us right now. We will start a really cool new format next year on YouTube and maybe also on other live streaming services. But like Roger and I will do a cool thing together. I'm so looking forward. I think the 20th of January is the starting date, but I'm not 100% sure. Going to get wild soon, in my opinion, but I'm always wrong about the short term. Yes, I'm the same way. Yeah, and this is actually interesting because like we all thought Bitcoin is going up in 2025. Like literally every single guest of mine, I have it documented. Not one person thought 2025 will be a down year. Nobody. And I'm not feeling bad for it, but it's like I'm feeling actually good for it because it actually gives us a better opportunity to stack more Bitcoin and stack more sats. But at the same time, it's just like we waited for this 4-year cycle and now it's not happening. What the F? But I get it, yeah. All things being equal, I think we will see a blow off top next year when we have Bitcoin real estate hybrid lending products. Yeah, the Bitcoin real estate hybrid, like the Bitcoin real estate kind of merchants is massive. There's a lot going on currently. And I love to see it. Live guests will be fun. I'm actually working on something that I also have guests on the show. But I first want to really find the full format, how I'm doing it, because I'm still like moving things around so much. I guess I only want to have on once I figured everything out. Now, what's going on? Yeah, I think that's it. Yeah, Roger said like prepared to announce. Really cool. Then Roger is also looking forward to it. And so thank you so much for everyone that is watching and listening and tuning in today. As always, I'll be back tomorrow with another live episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.